Everybody, good afternoon. This is Neil. Going to do the free video tonight, Simpler Futures. And looking at the S&Ps here, we've got a continuation of this sideways trade that's been the case for about 6 weeks now. Interesting thing, we came in today, started off the first week, with trading with the new administration, etc. And even with, some little bit of news over the weekend, that kind of thing, we had some trade last week, the trade right there on Friday. You can see little, unable to hold the highs, I guess, leaving the evidence on the top with that wick, which would imply that we would see a little bit of selling today. But what's interesting about this selling that we saw today was it's very similar, reminiscent of what we've seen here last couple of times down, and that is that we're unable to stick down here thus far, at least. And so until that behavior changes, then I'm going to continue to look for some sideways to higher type of trade. In fact, this trade today would indicate likely some sideways to maybe a little bit higher trade tomorrow in the inability to hold and or stick on these lows down there today. So give you an idea, recently we've had this sort of line in the sand, I guess, if you will, here at about 22.43 and trailing, give you an idea of where this thing could turn bearish. I mean, reasonably, this actually could, come up a little bit just below the wicks here, that pretty consistent dips into the 53 and 55 area. We're unable to hold and or able to be bought and pivoted for higher. Now, last week, the expected move was priced in at about 20 points, and it was literally spot on perfect. The range was about 53 by 73 in the S&P. This week, we've got the same expectation, which is about 20 points priced in between now and the end of the week. That means that, for instance, if we've seen the low of the week here at 53, then we're pretty much right on track for what we had last week, and that is, 53 by 73. Here is the one thought that I want to kind of cap this off with, and that is that, when this does come out of this compression, it's I would anticipate it's being more than just your typical little 10-point wide range day like we've had, as of late. In other words, that 20-point range for the week could literally happen in one day when it comes out of this compression. And obviously no one's got the answer for exactly when that will be. I mean, we've been doing it for 6 weeks. So just kind of keep that in mind. If some news were to break, good or bad, then we'd be looking for this thing to reprice based on that new risk, and it could be rather expansive in price discovery. But we're not there for right now. Right now we got 20 points priced in. We've got a 53 low end, very similar to last week, and these wicks on the bottom indicate likely sideways to maybe still with a long bias about it. And that's the indices. Now, there's some interesting stuff, though, actually going on in a few things like the yen, gold, bonds, that kind of thing. I'm going to get over to the premium video and take a look at that. And so wish you good trading for now, and be with you again at the next update. Until then, good night.